Greetings, fellow financial adventurers. Welcome to our channel Snap Savings, your fortress of financial wisdom.
Did you know that a significant portion of the population is living paycheck to paycheck? It's a silent crisis, and it's more common than you might think. Many people are struggling to make ends meet, let alone save for the future or handle unexpected financial emergencies. One of the biggest contributors to this issue is the lack of financial education. Many individuals are not equipped with the knowledge and skills needed to manage their money effectively. This often leads to poor financial decisions, overspending, and a lack of savings. Another major factor is the pervasive consumer culture that encourages spending beyond our means. We're constantly bombarded with advertising that promotes instant gratification and material possessions. It's crucial to be mindful of these influences and develop healthy financial habits. By adopting sound financial practices and making informed decisions, we can build a more secure financial future. Remember, small changes can make a big difference over time. Taking control of your finances is within your reach. Start by tracking your income and expenses to understand where your money is going. Create a budget that aligns with your financial goals, whether it's saving for a down payment, paying off debt, or investing for retirement. One of the most important steps towards financial security is building an emergency fund. Aim to save 3 to 6 months' worth of living expenses in a readily accessible account. Another crucial aspect of mastering your money is managing debt wisely. Prioritize paying down high-interest debt as quickly as possible while making on-time payments for all your other financial obligations. Explore options such as debt consolidation or balance transfer to potentially lower interest rates. By implementing these strategies and staying committed to your financial goals, you can pave the way for a more stable and prosperous future. It's time to take charge of your money and unlock your full financial potential. Saving money doesn't have to be a daunting task. Start by setting realistic savings goals. Break down your savings goals into smaller, manageable milestones to track your progress. One effective strategy is to automate your savings. Set up a system where a portion of your income is automatically transferred to your savings account each month. Another powerful way to boost your savings is to reduce unnecessary expenses. Identify areas where you can cut back without sacrificing your quality of life. Small changes in your daily spending habits can make a significant difference over time. By consistently saving, even small amounts, you're investing in your future and creating a solid foundation for financial security. Start small, stay consistent, and watch your savings grow over time. Debt can be a useful tool when managed responsibly, but it can quickly become overwhelming if not kept in check. Understanding the different types of debt and their associated interest rates is crucial for making informed borrowing decisions. Prioritize paying down high-interest debt, such as credit card debt, as quickly as possible. One effective strategy for managing debt is creating a debt repayment plan. Consider using the debt snowball method, where you focus on paying off the smallest debt first while making minimum payments on all other debts. Another important aspect of outsmarting debt is to avoid unnecessary borrowing. Before taking on new debt, carefully consider whether it's truly necessary and if you can comfortably afford the monthly payments. By understanding interest rates, creating a repayment plan, and avoiding unnecessary borrowing, you can stay ahead of the borrowing curve. Take control of your debt and pave the way for a more secure financial future. Investing is an essential part of building long-term wealth and achieving your financial goals. Start by educating yourself about different investment options such as stocks, bonds, and mutual funds. One of the key principles of investing is diversification. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes, industries, and geographical regions. Consider investing in low-cost index funds or exchange-traded funds, ETFs, that provide instant diversification. Another important aspect of investing is taking a long-term perspective. Avoid making emotional investment decisions based on short-term market fluctuations. By consistently investing and letting the power of compounding work its magic, you can grow your wealth over time. Start small, diversify your investments, and take a long-term perspective. Creating and sticking to a budget is the cornerstone of sound financial management. It allows you to track your income and expenses, identify areas where you can save, and allocate funds towards your financial goals. Start by listing all sources of income and categorize your expenses. Use budgeting apps, spreadsheets, or even a simple notebook to track your cash flow. Allocate funds to each expense category based on your needs and priorities. The 50-30-20 budgeting rule is a good starting point. Sticking to your budget requires discipline and commitment. Review your budget regularly, track your progress, and make adjustments as needed. Celebrate your successes along the way to stay motivated. By taking control of your finances through budgeting, you can achieve your financial goals and reduce financial stress. Small, seemingly insignificant expenses can add up over time and sabotage your financial progress. These latte factor expenses can drain your bank account without you even realizing it. Take a closer look at your spending habits and identify areas where you can cut back. One common culprit is dining out. Consider cooking at home more often or opting for more affordable dining options. Another area to scrutinize is entertainment. Explore free or low-cost alternatives such as visiting parks or borrowing books from the library. Review your recurring subscriptions and cancel those you don't use regularly. By becoming more mindful of your spending habits, you can free up extra cash flow. Start by tracking your expenses and redirecting those funds towards your savings or debt repayment goals. Life is full of surprises, and not all of them are pleasant. Unexpected events can create significant financial strain, especially if you're not prepared. This is where an emergency fund comes in. Aim to save 3 to 6 months' worth of living expenses in a readily accessible account. Start by setting a smaller savings goal, such as $1,000, and gradually increase it over time. Once you've established your emergency fund, resist the temptation to tap into it for non-emergency expenses. If you do need to use your emergency fund, replenish it as soon as possible. Having an emergency fund provides peace of mind and protects you from financial hardship. Start building your emergency fund today and enjoy the security it provides. The path to financial well-being is often paved with good intentions, but there are common financial pitfalls that can derail even the most well-intentioned individuals. One common pitfall is impulse spending. Before making a purchase, especially a significant one, take time to consider whether you truly need it. Another trap to avoid is living beyond your means. Live within your means, prioritize your needs over wants, and avoid the temptation to overspend. Avoid get-rich-quick schemes or investment opportunities that seem too good to be true. Be wary of high-pressure sales tactics or investments you don't fully understand. Seek advice from qualified financial professionals before making any investment decisions. By being aware of these traps and taking steps to avoid them, you can stay on track towards your financial goals. Navigating the world of finance can be complex and overwhelming. Seeking guidance from qualified financial professionals can provide valuable insights and personalized strategies. Financial advisors can help you create a comprehensive financial plan that aligns with your individual goals. They can provide guidance on investment management, retirement planning, estate planning, and tax optimization. Look for advisors who are fiduciaries, which means they're legally obligated to act in your best interest. Certified public accountants, CPAs, can assist with tax planning and preparation. Financial professionals can provide valuable insights, save you time and money, and help you achieve your financial goals more effectively. Don't hesitate to reach out for professional guidance when needed. Your financial well-being is not determined by chance, it's the result of the choices you make today. By adopting sound financial habits, making informed decisions, and seeking expert guidance when needed, you can take control of your financial future. Start by educating yourself about personal finance. Develop a budget, track your expenses, and identify areas where you can save. Prioritize paying down high-interest debt and avoid unnecessary borrowing. Invest wisely for the long term, diversify your investments, and take advantage of tax-advantaged retirement accounts. Seek guidance from qualified financial professionals to create a personalized financial plan. Remember, your financial journey is unique to you. Take charge of your financial future today. Start small, stay consistent, and watch your financial well-being flourish.
Don't forget to like, share, and subscribe for more profound insights into mastering your financial journey.